BB Energy, Frank Kane, Senior Business Columnist at the Arab News, and Andre Bellier, Professor and Founder and CEO of Balacine. Thank you very much, gentlemen, for joining us this morning, November the 8th already. Omar, if I could start with you, please, and take a little look at the markets. Obviously, the oil price, we saw it generally softening for the last couple of weeks, and now sort of receiving a bit of a boost at the end of last week, and we can talk a bit about how it started this morning. What's prompted the turnaround in the softening, would you say?
Well, the market basically, I think, trend-wise is heading higher. So I think we saw the end of the correction on Friday, and it was a very, V-shaped kind of bottom that was put in. So I think we are starting our move to $92 basis TI. WTI is trading 82. Next stop 92, and I think we started on that move. We put in a low on Friday. Again, we gapped up again today. So if you look at Friday and today's gains so far, you're talking about $3.50 a barrel. So I think that's pretty emphatic that the correction is finished. So I think new highs looming. I think it's going to be a very important week, not just for oil, but also look at Bitcoin. It's flying. I think the equity markets are going to fly. I think we're going to have a major surge starting this week. I think this week is going to be really crucial. So I think it's lit basically, and we see how we go. But I think it's going to be a very important week for all markets, from oil to equities to Bitcoin, higher across the board, strongly so.
Yeah, I mean, in terms of the oil markets receiving more support, you've said that you were expecting one more blip at least in the curve, if you like, before it settles. Has that resurgence since Friday has got anything to do with the market sort of dismissing this whole US release of SPR reserves? I mean, Biden was talking about it throughout the week last week. Is that part of the?
No, I don't think. I mean, all this stuff, all the talk about SPR and the talk about shares, it's like that thing about shale coming back, right? So every time the market moves up $5 or $10, they tell you that shale's going to come back any second now. And in the same way, the US is saying, if we go up another $10, then SPR. But SPR does nothing. SPR is a very short-term thing. They can release SPR into the market. Will it have an effect? Yes, it'll be a blip. Will it change the direction of the market? No. The downside of that is if you release SPR and the market takes it in its stride, which I think it will, then that's even more bullish because your stocks are being, are depleted even more. So no, I don't think they're going to do anything to do with SPR.
Okay. Frank, on that point of SPR in the US, Saudi, the US, the whole spat, if you like, the war of words on being called on to produce more oil, pump more oil, by the US on Saudi and OPEC. Has there been a complete waste of time by Biden? I mean, he's obviously given up, right?
Yeah, it seems so. And you might say quite rightly. I was speaking last week to Saudi oil people in Glasgow, and they really are in no mind, for any change on this. There is a long-term strategy. It runs till the end of next year. Releasing 400,000 a month onto the market, and they take the view that if Biden wants more oil, there's plenty of oil to be pumped in Texas and New Mexico, and let him lift some of the restrictions and the financial disincentives to pumping that. OPEC is almost back where it was at the end of 2019. Whereas US shale is still way down on where it was then.
But I mean, US shale is not down because of Biden's sort of, let's say, medium to long-term policies of restriction. It's down because of current operators watching the price, right? And the argument is that the price has been obviously very strong, very healthy. And yet we haven't seen a lot of that oil come back. Do you think it's to do with the supply chain worker parts issue that we're having in the world, or is it just, more caution?
I'm sure that supply chain problems are having some effect, but isn't it mainly because of Biden's, very pro-environmental policies and the new spirits of ESG awareness by American financials, where they want to take money out of the oil business now in the form of dividends, rather than put money into it in the form of new investment. That seems to be the reason for it, I think. Sorry, one other point. From the Saudi point of view, Omar was talking about the SPR and how that might have little effect. One worry for the Saudis is a re-emergence, and indeed the rest of OPEC is a re-emergence of the NOPEC legislation that's been kind of threatened on and off now for many years. Whether Biden will lash out with some kind of new bill that proclaims OPEC Plus to be illegal cartels and therefore stop dealing with them. That is a fear.
Well, let's just stick to Saudi, Frank, and stick to you just for another minute and talk about, obviously what they're pumping right now. The consensus is they're not going to be giving up this great revenue that they've got and that they've had for a few months now. But, from a budget point of view, we saw that in surplus in the third quarter for Saudi, but surely it can balance its budget on much lower than 85. So, where do you think its thinking is there? How low could it consider to go with prices if that's the direction we start to see?
I'm never certain on this break-even figure. Some people put it as high as 85, 90. Others put it much lower. So I'm not sure that there is a consensus, but certainly at these levels, it is money in the bank for Saudi Arabia. So they rather like it where it is, and producing a lot more too. They're winning both ways. It's a win-win for them. And certainly the economic figures look pretty healthy. I noticed last week S&P made them stable again rather than negative. The sovereign debt and all sorts of things are going on market-wise. The Tadawul is floating, doing its own IPO on itself at the end of this month. That $3 to $4 billion worth of IPO. That is big news. There are lots of other IPOs in the market too.
Yeah. And I wanted to talk to you about that a bit later on, actually. Andrew, just to stick to oil for now and talk about gas and Russia. We've seen oil, it was retreating a bit for a couple of weeks, I suppose, along with gas prices, you could argue. Gas prices, Andre, would you say we're going to see another spike, or have we calmed down for good now?
Well, it depends, because now the gas price became kind of psychological price, as it was initially unexpected growth. Then now markets, especially in Europe, are very nervous. And you remember then when Gazprom didn't book additional capacity via Ukraine, then the prices surged. Then by contrast, when Russia's president promised to fill underground storages up to a necessary level, then the price declined. So you see that actually is mostly psychological price. And now the big question is whether Gazprom fulfills the promise of filling the underground storages in Europe. They are still at a low level, not critically low, but lower than usual. And that basically weighs very much on the market.
Okay, and how long does the market give Gazprom to do that and to prove that?
It should happen now, basically from mid-November onwards. We have to see either an increased volume from Russia, or it's not going to be an increased volume. So if we're going to see a rising volume, then of course is going to be a factor which would help decreasing the price. On the contrary, if we do not see any flows from Russia again, then of course market players will become very nervous.
Well, I mean, we've seen the UK, for example, have call on Qatar for standby LNG cargoes. That's standby, not yet maybe fully confirmed, but that doesn't bode very well, does it, in terms of the confidence of what Russia as a backup?
Not yet. LNG markets are not yet recovered fully, and I guess that actually they're gonna recover little by little. We also seen Italy concluding a long-term contract with Qatar. We also see Poland attempting to conclude new agreements with American suppliers. So it's not only the UK. And of course, European countries are trying to kind of like rebuild the confidence in LNG market, so LNG flows again, but it doesn't. LNG suppliers still prefer going to Asia because of the price premium, but also because Asians offer this perspective that in the midterm, LNG will be needed. By contrast, European policymakers made it quite ambiguous about the future of natural gas, and that basically hinders the market confidence as well. And the big question will be now, what kind of legislative proposal Fit 55 will look like regarding the natural gas, especially in light of this crisis, and whether the European Union will reinforce its strategy on liquefied natural gas.
Omar, let's go back to the markets and products. Talk a little bit about jet fuel. It's obviously had a bit of a recovery in the third quarter compared to the previous 12 months. And now we've got airlines talking about hedging fuel forward because they're worried about prices increasing. What's that doing to jet, and what was the projection for the next sort of 2 quarters, let's say, for jet fuel in terms of transport and travel?
I think basically jet made its move about 3 weeks ago. So if you remember when Cathay Pacific was saying that they were flying like 9% of what they flew in 2019, and the bet was either you bet that the 9% is going to go to zero, or the 9% is going to go higher towards whatever number. So obviously, I don't know many people who bet that the 9 would go to zero. So I think the bet on jet fuel has already been made. The move has already been made. It went from about 20 something to about 40 something, the differential between jet and gas oil. And, you know, this is, again, I think, in general, we are late in the cycle. So we're going to get this rally. This is going to be the euphoric kind of thing. You get all these news stories late in the cycle that, oh, by the way, it's going to be a cold winter. Oh, by the way, you know, they're going to reopen this route or that route. Oh, by the way, visas are going to be easier. More people will travel. Oh, by the way, you get those late in the cycle. At the beginning of the cycle, you get, no way, we're going up. It's never going to be the same again, blah, blah, blah. So right now, I think we're late in the cycle. So one more push up. I wouldn't be long jet fuel past January. I would be long jet fuel between now and January, calendar January, so February futures. And then I'll be, you know, short the entire market. I think one last push up. People are always greedy, so am I. I think one last push up and then we sell. You know, there's no any reason to stand in front of the trend.
What about China? Any concern there in terms of the sort of, I suppose, revisions of a demand downwards? It's clearly the GDP revisions that we've seen in the last month or so. I mean, in terms of the support it's offering the market, Omar, any concerns there in terms of impact on this last blip upwards? Zero concern.
So every single story, negative story that you've heard about China is basically doesn't materialize. And it's been going on for a number of, it's the same to do with Russia. All these stories are just complete rubbish. So I don't get it. So you had the Evergrande thing, then you had, you know, they're building nuclear missiles, then you had, you know, Hong Kong, and that's going to collapse, and the Chinese are going to collapse. And they've been growing steadily for 30 years, 40 years, 50 years. And they've overtaken the US and they've overtaken Europe, and they have 5G. They're technologically ahead, economically ahead. We in the West no longer have the moral high ground. Blah, blah. So bottom line is no, I'm not at all fearful that China's going to do anything except grow and grow quicker than the US and grow much quicker than Europe between now and forever. Not because of anything, but because structurally, they don't have the same levels of debt as we do. They don't have the same types of societies as we do. They don't have this basically, companies that just need to benefit shareholders, doing, borrowing money for free and doing these, buybacks and all this kind of stuff. So China, if I was, I know that Chinese stocks have taken a hit lately, but if I was to be long something for the next 5 or 10 years, it would be Chinese stocks, not European and US ones.
Well, let's talk about stocks, Frank. On the Saudi, let's come back to the Gulf markets. And stocks there. We've seen, the Gulf stock indices outperform S&P this year. They're all up 60, 50, 60, 70%. S&P and NASDAQ have been, arguably also, very strong. But, complete turnaround, obviously, along with the oil price recovery that we've seen. But it's more than that, isn't it? I mean, let's talk a bit about what you were mentioning earlier about the IPO stream of planning. For the Gulf, there seems to be a flurry, especially in Dubai, of IPOs planned. And what is this? Is it a desperate sudden need for cash, or what's going on?
Good Lord, I mean, this has been a long time in the making, hasn't it? There is a need for cash. I think special factors relate to Dubai because, you mentioned the very healthy regional markets. Tadawul, ADX have both been very strong. But DFM has not particularly, that has been the laggard. So maybe there is a need to inject something into DFM to get it going again. And we saw last week the intention to IPO DEWA. Nothing the market likes better than a nice bit of regular utility income stream, very dependable. In Saudi Arabia,
I mean, the UAE seems to have had a flurry. ADNOC obviously had its pipeline, and then we've got the Barouge talk about that, the plastic side of ADNOC partnership. Saudi is that. I mean, obviously there's a lot going on there, but it's not as much a need, is it, for cash and IPOs? It's private companies. What's going on there?
Well, it wants a healthy market. Saudi is moving big time into the financial sector. It wants Riyadh to be the financial hub of the Gulf. It's challenging Dubai in that respect. Hence things like the Tadawul's own IPO, and if you believe it, 30 to 40 other IPOs coming up. There is big activity there, but how much can those three markets, compete against each other, and how much will they cannibalize each other if they keep going big into financial services? That has to be a fundamental question. And Saudi Arabia is much bigger than the other two in comparison. You would think that Riyadh has pole position here if they ever get the other factors right. I was there a couple of weeks ago at the FII and noticed that the King Abdullah Financial District is, it looks pretty complete to me now, and people are moving in there. So, once that gets up and running, will that be a serious challenge to Dubai? I think it probably will. And yeah, go on.
Yeah, and you've got it. Of course, it's pushing its tourism market as well. It's not just business and financial sort of center incentives. It's tourism, which obviously there is a lot of in Saudi, but many people are unaware of, and that's obviously we've got huge billboards here in Dubai about it. So, that's right. But I think a lot of commentators
something on the quality of life benchmarks, of course. It's all well and good trying to attract lots of multinational executives, but their children need some place to go to school, somewhere decent. The social and cultural elements of life have to be addressed too. That's kind of a euphemism, but we all know what we're talking about. But I must say, my last visit to Riyadh, I hadn't been there for a couple of years until the FII 2 weeks ago. There does seem to be a new sort of feel to the place, much more liberal, music being played everywhere, women walking around freely. It does seem different. Sorry?
And yeah, a whole new beginning, I'm saying, and very positive it seems on that front. We have, Andrew, let's just throw your attention to the survey question that we've just put up. Again, we're talking about gas here. Why have gas prices retreated? Is it because the energy crisis is over, or Russia is coming to the rescue? We mentioned that a bit earlier, how soon that could happen, if at all, or is it because of downward revisions in economic growth, maybe not in immediate revisions, but sort of medium term, medium to long term, there's still a concern about that. Andre, your views on that, in terms of why gas prices have retreated. Let's not talk about the Russia angle, we've already mentioned that.
Right.
But in terms of this energy crisis over, or do you think it's more about that, we've had slightly more negative outlook on economic growth going forward and revisions, whether it's in China or elsewhere?
Right. Basically, the gas price was overinflated, has been overinflated over the last months. So yes, at the beginning, the growth in price was stimulated by economic fundamentals, but then sociological or social psychology came in, and then the bubble appeared, and also, the financial sector started to play in the shorts, and therefore, of course, at some point, the price has to retreat. Yeah, and it's actually better if it retreats, because market players have more confidence in the available supply, and supply is actually there. It's in lesser volume than used to be, but it's not that underground storages are completely empty. They are about 70% full. Some market players have a trouble in it because they rely too much on spot, and for them it will certainly be a major challenge, but these are individual cases after all.
Well, what about, we got winter coming up, we already got a cold front across China. Last year we saw, of course, the spikes in winter for Japan, South Korea, etc. How nervous are countries like that about what temperatures are going to, obviously you can't predict what the weather's going to be like, but let's make that assumption. Do they have enough fly in the chain coming their way?
In summer, the weather was good, obviously, but the panic on gas market appeared. So it's not especially correlated. Of course, there are correlations between seasonal variation in gas markets and the price, but this particular crisis shows that this correlation is not always a law. And now I would say that, of course, the price should retreat to some extent, and also the buyers, they run out of money, they have to be able to pay for it, right? And therefore, I do not see a major potential for further growth, rather for a price retreat, unless some particular events which would create another sociological factor on the market, like, for example, if Russian gas flows will not flow enough to Europe.
Or let's talk a little bit about macro now. Omar, to go to you. We've talked a lot about the Fed in the last few days, last week, and obviously with their meeting last week, the impact that that's having on markets in general, and on oil and on a growth forecast, let's say. Omar, let's look at that. We had Chairman Powell last week clearly, at least for the time being, outlined that we probably won't see any gradual increase up in interest rates for the second half of next year, short of any other surprises happening. What's the impact, do you think, for the first half of next year on oil and the dollar, if that remains the case, that we really don't see any move on interest rates in America?
Okay, so basically America owes the largest debt in the world. It will not raise interest rates. It will never raise interest rates. And when it does raise interest rates, it's going to be a complete disaster, because what they have to pay back on the debt will be ginormous. So that's one. So they'll keep threatening and saying and whatever, but they'll do exactly what they've done for the last 12 years, which is nothing. That's one. So the US, now what we have is inflation, which, they don't add oil to it, but inflation is running at 5% in the US. Which means if you have money in the bank and you keep it for 13 years, you've lost half of it. So each year is 5%, 13 years, you've lost half your money. The US dollar, I think basically what's going to happen, so there's no it doesn't pay to keep your money in the bank. So asset price inflation, all this kind of stuff, right? So what you're going to see now, Biden's passed his, 1 trillion, I don't know what, and I'm
And
sure
another
there'll be
one
more
to come on
spending.
social policy.
Yeah. They'll keep spending, keep spending, keep spending. Inflation is quote unquote no longer transitory, which means it's gonna go higher, which basically means everybody is going to put money into commodities, into equities, into stuff like hedges like Bitcoin, and property. But again, in any case, there's certain places that are better than others because of tax and all the rest of it. But it means that inflation is coming. So right now, everybody's comfortable that basically we saw a large push up in markets, and then we had a small retreat. That's it. So now what happens is you get another massive, in-your-face, slam dunk, look and listen, and here you are, boom, in your face with bells and whistles to remind everybody of what's going to happen. So that's that. When that happens, then you turn negative. But until that happens, until it's a big, massive blah, blah, blah. So I don't think the market's going to go up $1 or 2 or 3, or I think it's going to go up 10. I think basically Bitcoin is going to go from 65 to 100 and something. It has to be a kind of wow.
In which time frame are you talking about?
Now, between now and December. So I think between now and January, calendar January, so real time January, WTI is going to move, in my opinion, from $82 to $92. Bitcoin is going to go from $65 to $100. The S&P is going to fly. Inflation is going to come in, and everybody's going to say, wow. And just when I think everybody says, this is it, and we're going to go to 200 and blah, blah, blah. But I think that the last kind of euphoric move is what we need to see, and it has to be big. It has to be convincing. It has to be, in other words, sellable.
And by contrast, then after that, the big drop, as you said, is that just we'll stop going up, or are you saying things are going to get oil prices?
We correct. I think basically we correct. I don't think we go back to zero, but I think we correct. Substantially, 30% of the move from 10 to 90, 50%, 60%, it depends, but we correct. And correction, by the way, doesn't necessarily mean going down. It can also mean going sideways. So the directions are up, sideways, and down. But I think basically we'll need to correct. We need to correct down, and then basically another leg to the upside. I don't see how they solve this inflation thing. I don't see, if you owe $1, $2, $10, $50 trillion and interest rates are zero, if you increase them from 0 to whatever, 0.25 or 0.5 or 1%, you're going to pay so much just to finance that debt. It's not doable. And the West is all in the same boat. And the markets know it. So they will keep pushing until something gives. I don't know what that thing will be. I've got no idea, but I think they'll keep pushing.
Irene, if we can just bring up that survey question again, the answer just for our viewers, just for a few more seconds, before I want to go to Frank to wrap up for us today and tell us a bit about his trip to Glasgow and COP26 and expectations there. We've got the survey question there. It's pretty close. Why have gas prices retreated, energy prices to the rescue? Or so that looks like a pretty balanced answer, a bit of both. Frank, tell us a bit about COP. Obviously, it's still going on. This is in week 2. I think this week 2 is all about the nitty gritty of pledges made and how they sort of try and move forward on some of those. We've had different comments coming in about the meeting, 1 or 2 positive ones saying, oh, it's gone much better than expected. But on the whole, the majority of people are saying, well, have we really moved forward at all? And in fact, have they moved the goalposts? So what was your sort of, let's say, 2 top takeaways from last week?
Well, there were some agreements in week 1. There was some progress. There was on reforestation, India giving a net zero commitment for the first time in its history, even though it was 2070.
I mean, yeah, we won't be around if that happens.
And yeah, sure, and some advancing on climate change financing, green financing. There were some positive things, but week one, as I understand it, was when the scene is set rather than decisions, final decisions made. So this week it's all happening. Amongst the Saudi delegation, which is the people that I was hanging out with, there was kind of bemusement that the rest of the world wasn't taking their climate change, recently announced climate change measures very seriously, it seemed. They were still painted as the big oil-producing polluter, whereas Saudi has done quite a lot.
Yeah, well, they are doing a lot, I suppose, but they are a huge oil producer. And of course, oil and gas isn't the biggest pollutant in the atmosphere. But also just the point about the fact that oil and gas companies, private companies, were sort of not welcomed, let's say, at COP26.
That's right.
That's all talked about as quite backward looking and destructive, really, because you need them at the table, don't you?
I think it was, yeah. The actual conference was split into two zones: a blue zone, which was government, and a green zone, which was non-governmental and corporate. But there was a very thin presence at the corporate side of it, and the two zones were miles and miles apart. You had to get a bus between one to the other. You couldn't walk it. So there seems to have been a very deliberate decision by the organisers, to keep government and private sector apart. Which wasn't a particularly good thing. Look, I must say some of the scenes there were surreal. You would turn a corner and you'd see an investment banker in a three-piece suit, shaking hands with an Amazonian Indian in a grass skirt. It was all quite odd, really. Was it a summit? Was it a protest? It was hard to work out. Week two progress is possible. The areas that were drawn up for me as crunch points were coal. Whether you can persuade India and China to do more to mitigate and abate coal. Two, the whole Article 6 of the Paris Agreement, which is about carbon trading markets. That needs to be clarified. Three, national fuel subsidies, where lots of countries, not just in the Middle East, but in Europe as well, still subsidize fossil fuels to a large degree. And finally, the 2 degrees and lower commitment. There was a feeling that some Western countries want to make this a hard and fast 1.5 degrees below, and that would be very difficult to sell in the rest of the world. So, those are the areas that still need to be worked on before Friday's joint declaration.
Yeah, there seems to be consensus that 1.5 is just not viable in terms of what was set in Paris. Of course, in Paris, that gave them a little wiggle room as well between 1.5 and 2. And you mentioned coal, and obviously we have been in retreat. China has pledged not to open any more coal mines, but it's also doubled its imports year on year because of the crisis that we saw this year. So that's kind of thrown a spanner in the works. Thanks very much, gentlemen. I'm afraid we're out of time. As Amar said, it's going to be a big week this week on all fronts. And of course, we've got CPI numbers coming out of the UK and the US as well, more indicators of inflation, where that's going. So we'll watch out for those. Thanks very much for joining us, Frank Kane, Amar Najia, and Andre Berry, and have a good week ahead.
Thanks, Yala. Thanks.
Thank you.
Bye.